Hey guys, Jay here and welcome back to the channel. So don't forget to like, subscribe, comment, hit the notifications bell if you haven't already. So we're going to be talking about raising the burn tax here, the idea of going to 1.2%, 1.5%, or possibly leaving it as it is. And what I'm going to do is kind of set the scene here and give you an idea and an overview of what I'm looking at and my current thought trajectory. And what I'm seeing is there's been a significant amount of burning in the past. Our blockchain is based primarily on the idea that we can burn through the overwhelming amount of coins that were minted during the DPEG. And that is the narrative. It's always been the narrative, and we seem to have deviated away from that a considerable amount. So I think it's high time we get back on course and we use and utilize what previously worked for us in the past, and it still works for blockchains like Shiba Inu, who are primarily based on burning through the overwhelming supply of around 500 trillion Shiba Inu coins. So when it comes down to the burn narrative, we know it's something that is broadly accepted. People like it, they understand it, and that's an important aspect, is understanding the goals of a blockchain. And burning is very easily understood for everybody across board. So when it comes down to the burning, we do have substantial support, and that support comes from Binance themselves, but we have had exchanges like MEXC burn previously. Now, I have a contact at MEXC, and the finite definitive reason they do not burn is because of the simple fact that they don't charge any fees for trading. So it's not a situation where they don't believe in the burns, they don't support it, they can't support it because they don't charge any fees. But they're still subject, like I've explained, to those withdrawal and deposit burn taxes. So once again, this all puts us into the narrative of burning. And as we're moving forward, we've got that substantial TFL list that I was just showing, which we're going to see a lot of burns coming from this, but we're also going to see the possible chance of a lot of wrapped assets burning. And we can see that there's a very small window to redeem these assets from the bridge. And I think it's going to be around 30 days. On top of that, there's going to be a massive discrepancy between the amount of coins you were getting at that time for the price in comparison to the value of those coins. Now, for the majority of people, the cost to move the coins off of the shuttle will outweigh the value of the coins themselves. So therefore, someone like myself will just have to leave all of those wrapped assets to be burned. So although there's a lot of people that are saying, you know, well, these all could be moved off, it could go back into the supply, we have to take the pros and we have to take the cons. And all we can do from this situation is look at the positives from this, which is once again burning. The narrative itself has always revolved around burning. Binance, the man, CZ, the big dog himself, even said, don't fork, burn. And Binance primarily support burning moving forward. So if we go over to top holders, there is a considerable amount in the Terra bridge. There's a considerable amount out there that is probably going to burn. There's a chance that we could see the classic assets in the LFG fund burned. None of us know because it's a Schrodinger's cat situation where we just don't know until it actually happens. But once again, revolving around the idea of burning. And if we go over to the top burners, we've seen a lot of different narratives which push around burning. Terra Casino burning, Lunatics token still sitting at 5th for top burners, and this really goes to show how powerful the burn narrative was back then. And what is another important aspect is YouTubers like burning, they like the burn narrative, and Luna Classic itself needs that YouTube coverage. It needs content creators waking up each day and committing and convicting themselves to the idea of doing at least one Luna Classic video a day. And that's what else is going to really help us get the attention of the market, is this everyone is collectively speaking about this idea of burning through the bulk of the supply. So now let's move over and start to get a real timeline on this situation. So the burn tax itself came around on the 10th of June 2022, and that was a 1.2% burn tax. And it was doing pretty well. We did see a positive reaction in the price. So then what happens? and it was a person called Akjuro on the 17th of October had a proposal passed to lower the tax rate to 0.2%, and 10% was of the tax revenue to finance the ecosystem was set aside. Now, it's at this point we see a dramatic shift downwards in the price. And from my understanding, the likelihood is a lot of people lost hope in the idea that we're ever going to burn through the considerable amount of supply that we do have. But what I would say to everybody is people are still heavily invested in Shiba Inu. So it's not a situation where I don't think we can't get all of the attention back. We can't increase the awareness around our blockchain again because we have a very, very low supply in comparison to Shiba Inu. Around 6 trillion is what we would probably be able to burn through with the help and support of a lot of different blockchains, a lot of different people, a lot of different burn narrative. We probably could get through around 6 trillion of the supply. So this leaves us in a situation where more or less we've got around 494 trillion less to burn through than the Shiba Inu ecosystem. And this is not me dunking on them. This is me just looking at things in a logical manner. There's a lot more to be had in this ecosystem in the sense that you can be involved. You can create a validator. You can have say and sway over the blockchain's decisions with your coins. Even if you're just a delegate, you still have the ability to do that. So moving forward, the final tax change of note would be on the 17th of May 2023, and the burn tax is increased to 0.5%. So we've got a timeline there of exactly what happened with the burn tax, going from 1.2 down to 0.2 back up to 0.5. So now let's move over to the chart and let's look at that timeline. And what we can see is the first talks of a tax decrease. We can see the tax reduction prop going live, and then the 0.2 reduction passes, dropping it a whole 1%. And we do see a dramatic move down from this point all the way until the 0.5 increase. We see a decent drop, and we continue to drop until the point of that tax increase passing. We get a static area of moving slightly down. We hit an all-time low and we bounced up. And this is a 400% move here. A very substantial move for Lunar Classic. And then we did see a clawback, and there was some burning in between here. I'm not sure on the exact date, but there was the USTC burn, as you all remember. And we had a previous USTC burn around here as well. And what we're currently seeing now is TFL announcing the possible burning of these wrapped lunar assets. The burn talks are increasing. There's a lot more activity around burning, and we're starting to see a positive reaction. And some people would sit and they would say, well, Jay, how can you relate that to what is currently going on with burning? And I would say it's all we've really got going on. It's what everybody's talking about at the moment. There's no major projects launching. There's nothing crazy going on chain. Binance burn every month. This is really something that's starting to get people more interested, even to the point where I'm starting to see different YouTubers talking about these things. So I don't think doing nothing is the right thing to do in this situation. But I also don't think going to 1.5% is a smart thing to do, because we've got data to show us that the 1.2% was having a positive effect previously. We've got data to show us when there was a slight tax increase, we did see a price hike after some time, after a decent setup down here as well with the doji. So this is good data to support the idea of going back up to 1.2%. Now, 1.2% has already been broadly accepted by the majority of exchanges. Binance included in that themselves. They are whitelisted, so they're not affected, and they would support such a change. But 1.5% is the unknown realm. We have no data to support this. We don't know if the majority is on board with this as it is. So we're already asking those who would possibly meet in the middle, instead of meeting in the middle, we want you to meet us 30 yards over the middle line on our side. And I just don't think it's fair to go up to that level currently, especially with projects, smart contracts, all of the different things that it's going to affect. Going back up to 1.2% seems logical acceptable and doable because we have the data to support it. So an important point of the current proposal in talks to go up to 1.5% isn't the fact that they want it to go to 1.5%, it's that they want to leave it in place until a total supply target of 10 billion LUNC is reached. But what everybody needs to understand is, if we go back over to the top holders here, we can see that getting down to the 10 billion range would mean that Binance themselves would have to do something considerable to get to that level, let alone the rest of the market. So putting a proposal up to get a 1.5% burn tax in place that remains in place until the supply reaches a level of 10 billion, which there's zero data to support the idea of actually being able to get down to that level. Is it feasible? Is it doable? And this is the thing with proposals. You've got to look past just the idea of going up to 1.5%, because if we do lock into a proposal like that, and we do lock into the idea of getting to a 10 billion market cap, circulating and total supply, it's going to leave us in a situation where we're going to have people who get on board specifically with the idea that we can, in fact, get the supply to 10 billion. And I think that's very unfair. But let me know what you think. If you think it's a good idea, should we go to 1.5%? Should it be left in place until a total supply target of 10 billion LUNC is reached? I personally will always stand by the idea of a Goldilocks tax, a dynamic tax system that moves between the ranges of 0.2% and 1.2%, depending on on-chain and off-chain volume. It is a big amount and it is a huge thing to try to implement. But once again, it's like a permanent fix, because no matter what happens, 1.2% during the bull run is probably a very, very good target to have. But 1.2% when we're not in the bull run is probably not going to be a smart idea. It's probably going to burn out the volume. It's probably going to have a negative effect. So these are all of the different things that I'm looking at. Sadly, I wouldn't vote yes to support a proposal like this, but I would vote yes to a simple proposal to change the parameter for the burning to 1.2%. And I think people are just overcomplicating it and trying to get a mile out of an inch. What I'm hoping is we start to attract more of the burn side of crypto back in. That's what I'm really hoping. That's where we benefited the most. That's where we had the most traction. That's where we had the most people trying to figure out how they can replicate what Lunatic's token did, how they can try to burn more coins. YouTubers talking about the burns, Binance talking about the burns, people doing spaces about the burn, everybody talking about the burns once again. But let me know what you think. Aside that, like I was saying at the beginning of the video, don't forget to like, subscribe, comment, hit the notifications bell to stay informed and stay safe, stay humble, stay aware. And as always, I'll catch you in the next one.